Welcome to the 2025 summer housing forecast. I've gotten out my crystal ball and got everything figured out. Know exactly what's going to happen. Going to tell you the future and what's going to happen next. So this is not just Phoenix. We're going to talk about San Diego and really the whole country as well. But attempting to predict the housing market during a trade war looks like this. It's a little crazy. Things are a little insane right now. Rules that have worked for lots and lots of years on how to predict what's happening are no longer working. So it's become a little bit difficult to predict what's happening. And but we're gonna do my best to figure out and to share what's happening at least in the next 6 months or so during the summer. So here's the market cycle. This is what's you can see really interesting that's happened is the cycle for housing market has shortened. And so normally, we see what you can see on the left there, which is sort of this process of people going from optimism, enthusiasm, exhilaration, euphoria, which we saw in 2022, and then it gets sideways, right? Things get a little slower, and then it's a little bit sketchier, then there's panic and then despair. And normally that cycle takes years. It does not happen overnight, but man, things have changed. In the last couple of years, we have seen what I'm calling mini cycles, where we see excitement, oh, things are getting better, and then they get worse. And then things are getting better, and then they get worse. And the cycle has shortened significantly. So right now we're kind of at the despair stage where people are like, what's happening? It's a little scary. There's tariff concern, there's recession concern. And I don't know, how quickly or how long this will last, but I can tell you kind of what's happening now. And so we'll give you a little insight into what this season looks like now, and maybe this will lead to a more predictable cycle where we're going to see a nice upswing that takes a while, and then we've got maybe a couple of years of good times ahead of us, or maybe not. Maybe it's going to be a little slow, but I will give you my thoughts on that. First of all, let's look at what happened in the past. So this appreciation, you can ignore the headline there. This is November of 20. So this is about a year's worth of appreciation through January. So this should say January 24 to January 25. So what you can see across the country is appreciation is still happening. And we still see upside in the market. Now, not near as much. And most of the people on this call are going to be in Arizona or San Diego, because those are our two main markets. But, and so we do see some appreciation, just not much. So San Diego 1.7%, Phoenix 1.5%. These numbers are a little old. The Case-Shiller index that publishes these numbers is about 2 or 3 months behind when they publish the numbers. So this is a little bit behind. The numbers have gotten a little bit worse since then, but we still are seeing a minor amount of appreciation in our major markets. But then we are seeing places like Florida really start to take a beating. And that's because of the tropical storms in Florida have caused insurance companies to really raise their insurance rates. We're seeing that same thing happen in California, where fires are causing insurance companies to kind of double down on their insurance rates. And so we're starting to see that show up in the numbers. People are like kind of overpaying those high insurance rates. And so I do anticipate both Phoenix and San Diego getting down to zero, near zero, or maybe even a little bit negative in the coming months in terms of appreciation. But we're seeing a little bit right now. Let's talk about inventory. So this is San Diego. And that blue line, as it moves left to right, you can see is inventory. And so on the far left, that's June of 2024. And you can see we've kind of been bouncing around that 4,000 homes for sale. So this is the number of homes for sale in all of San Diego County. And so that number, as you can see, started an uptick right around December, January of this year, and has just continued to grow and grow and grow. And so we can see that showing up in the numbers there in that chart down at the bottom as well. So you can see that active inventory, this is from last week's data, the May 9th through the 15th, so 2 weeks ago. We can see active inventory bumping up 5%, and the number of new sales, so you can see there 405 versus 454, going the wrong direction. So the number of home sales decreasing, which is common at this time of year. Summertime, it starts to slow down a little bit. People are traveling, doing their thing. But we also see active inventory increasing. Those are all negative signs for sellers. So those are signs of a softening market where we've got more homes for sale and less people to buy those homes. So homes are taking longer to sell. People are having to get a little more aggressive with their pricing. And so if you're a home seller right now, times are a little tough. Now, nothing crazy, nothing to panic about. This is not 2007, 2006, but sellers are having to revise their expectations and realize that what homes sold for in their neighborhood 6 months ago may not be what their home is going to sell for in this current market. And so we're starting to see that in a pretty significant way in San Diego. We can see that same thing in Phoenix. So you can see I kind of tagged, there's a little dot there in the middle of the screen. From this time last year, there were 2.3 months of inventory available in Phoenix. That means if we stopped listing homes, no more new home sales. We stopped listing them, but we kept allowing them to sell. So no new inventory. We just soaked up the inventory we have. How long would it take to disappear? This time last year was about 2.3 months, but now we're at 3.4. So that's a significant increase. That's a 35-ish% increase in the amount of supply that we currently have. So same thing's happening in Phoenix, where we've got more and more homes for sale and less people to buy those homes. A lot of that is because of interest rates. Interest rates are very high right now, relative to what they were 5 years ago. And also prices are high. And so people are just having a hard time affording homes. And so they're kind of waiting to purchase. This is the Cromford Market Index. This measures how hot a market is. And so you can see there the blue line from last year and the pink line from this year. 100 would be a balanced market. So that'd be normal. And this index is particular to the Metro Phoenix area, but San Diego tracks Phoenix very closely in terms of how the real estate market's doing. So it's very similar in Phoenix, where last year was kind of, there was a little bit above 100. There was a little bit of upward pressure on pricing toward the beginning of the year, but then it just kind of got worse and worse and worse throughout the year. And this year has continued to get worse to where now we're down in the 75 range, which means there is negative pressure on pricing. So this is predicting what's going to happen. I showed appreciation numbers a few slides ago. That's old data, right? That's what already happened. That's looking at the past. What we're now looking at is the future. So this is predicting what's going to happen. So we do see very clear signs that home prices are going to go down. For comparison, here's 2021. So the Cromford Index at that time was at like 520. So you can see that's what a rip-roaring hot market looks like versus what we're experiencing now, which is a significantly cooled down real estate market in both Phoenix and in San Diego. And what's happening is we've seen a decrease in both supply a decrease in demand, and then a slight increase in supply, and that's causing the market to get softer and softer. One thing that is worth noting is there's a lot of pent-up demand. So here you can see the number of annual sales in Phoenix. And by the way, if you've got questions, feel free to drop those in the chat. I'll address those at the end if folks have got questions, or I'll try to keep an eye on them as well. Is this for the buyer or seller? So, sorry, Nancy, I didn't catch when you asked that question. If you remember which slide it was on, I could take a look at it, or you can pop in the chat. But the situation here is we've got the number of home sales, and you could see it was increasing because of population growth. Phoenix just keeps getting bigger, so more and more people are buying and selling homes, right? But then we saw the steep drop off into 2022, then 23 and 4 and 5, way less houses are selling. That's not because less people live in Phoenix. That's because everyone's sitting on the sidelines. So lots of people have a 3.5% interest rate and they don't want to sell their house. Or buyers would like to buy, but they don't want to pay the prices they have to pay right now, or they don't want to pay the interest rate they have to pay. So lots of people are sitting on the sidelines, both buyers and sellers. And so you can see some headlines over there on the left. April home sales dropped to the lowest pace in April since 2009. So very few homes selling right now. This is not because people don't want to buy or sell a house. I think lots of people do want to buy a house, but I'm just convinced people are waiting on the sidelines. And so at some point, the dam is going to break, right? At some point, people are going to make a move. I'll give my story as an example. My family has just sold our house in San Diego, which had a 2.6% interest rate. And we're buying a house. We're moving back to the Paradise Valley, Arizona area. And our interest rate is 6.25%. That's, our interest rate more than doubled. Why would we do that? That's crazy, right? Well, because our life dictated it. Our kids got into a school we wanted them to get in. And so our life is kind of moving on, even though it's going to cost us a lot more money. And we are going to see more and more of that, I think, where people were kind of waiting around, like, when are interest rates going to get better? When are things going to change? And they're starting to realize not anytime soon. And eventually life wins. People are trying to make an economic decision, decide, I'll wait on the market, I'll time the market. That you can only do that for so long. At a certain point, people just go, you know what? I'll just pay the price. I'll just bite the bullet. I'll sell my house. I'll buy the new one. I'll do what my life is dictating. And I think we're going to see that happen more and more and more as people realize this is the new normal, at least for now. So I think this is, what I anticipate is when interest rates do drop, and who knows, maybe that'll happen in a month, maybe it'll happen in 6 months or a year. I don't know when that's going to happen. We kept thinking we knew it would happen, but the economy has not done what we thought it would do or followed the predictable rules. So when that happens, I do anticipate a big rush. I do think lots of people are waiting around for those interest rates. There are going to be people like me who decide, you know what, I'm just going to let life win, I'm going to move on. But there certainly are people who are going to be waiting around for those interest rates to drop. We're also experiencing a lot of recession concerns right now. And I want to talk about recessions just for a little bit. Recessions do not necessarily mean that home prices drop. So here you can see the times during recession where home prices continued to increase other than the housing crisis we saw in 2007-8. Otherwise, recessions have not really caused home prices to drop. So a recession in and of itself does not equal lowering home prices. Now, if we do end up in a recession, which is looking like possible that that's going to happen, and maybe even likely, that's not going to cause home prices to drop. However, as I've been mentioning throughout this presentation, other factors, which are high interest rates would be the big one, and then increased home prices, are in fact causing the market to slow down significantly. And as I suggested, and I really am predicting for the next year, we are going to see home prices drop. But that's not because there's a recession. You will see lots of news, I'm sure, that are direct correlating those two things, but that's not necessarily what's happening here. What's happening here is just a function of supply and demand, high interest rates, high prices. So the recession is not necessarily bad news for housing. What it is good news for classically is that during recessions, mortgage rates do tend to fall very, very predictably. So that could be good news. A recession might actually be good news for housing, because if we see a recession, we see those interest rates drop, that could trigger that flood of folks that I think potentially could jump into the market and be interested in both buying and selling their properties. So we're crossing our fingers that if we do get a recession, we're going to see those interest rates drop. Again, the old rules don't apply as much as they used to, but we're hopeful that that would happen. So let me summarize this with, I've got buyer advice and seller advice. So if you're looking to buy, my suggestion is, and I did the same exact presentation last year with different figures, of course, but it's the same advice, which is get in before interest rates drop and then you refinance. I don't know when rates will go down. Maybe, we'll see, but at some point it's likely that they go down. The worst case, if you're a buyer, the nice thing for me, again, I'm buying a home right now, is I know that 6.25% is the highest my interest rate will ever be. Like, I don't have to worry about that. I'm locked in, and that's great news. I'm happy with that. It's not as good as 3, but it's better than 10. And it's possible that interest rates will go up. In fact, since I locked in my mortgage rate 2 months ago, they have gone up. It would be at 7 today. So I'm happy at my 6.25, happy I bought the house. And the price of that home may be a little less in a year. I think there's a real strong possibility that the home I just bought will be worth a little bit less next year. But I don't care. I'm not going to sell the house in a year. But I will have the mortgage in a year, and I will be happy that I locked in at the rate I locked in. And if rates go down, I can always refinance, right? So my suggestion for buyers is let your life run the show. If you want to buy a house, let that happen. My wife and I looked strongly at renting a house instead of buying, but decided we'd rather own a house. And so that's what we're doing. We just kind of let our life circumstances win. I saw this interesting LA Times article last year, and I kept it in this presentation, which was insinuating that realtors like me, us sketchy, dirty realtors, were forcing people or somehow negatively persuading them to buy a home, to take the advice I just took, which is to buy a home and then wait around for interest rates to fall. And that was a bad idea. So this was written in 2024 when rates had not fallen. They still haven't fallen a year later. And they were saying, well, this was bad advice realtors were giving. I don't think it's bad advice at all. In fact, it's advice that I'm currently following for the same reasons I just explained. I'm not promising you that if you buy a home today, your rate will be lower and you can refinance in a year. I don't know if that's going to happen, but I can promise it won't be higher. Your interest rate will be locked in at whatever you get it locked in at. And if you're going to own the home for a while, like I am, why not buy the home you love and go ahead and live there? So I don't like this narrative, and I think it's actually great advice if you're wanting to buy a home, to not sit around and wait around for interest rates. I don't think that's the right call. Again, a reminder, if you bought a house a year ago, it'd be worth more today than it was a year ago. So you'd be better off because your home is worth more and your interest rate has not gone up. Maybe In fact, the competitive rates have gone up. So locking in, not always, in fact, I think most of the time, probably a good idea. And again, this is a reminder, if you zoom out to the big picture, that orange line you see there is home prices over time. So at time, at length, you're almost always going to be better off buying than you are renting. Interest rates go up and down, they change, things go how they go. But over time, the value of your home is very, very likely to go up. So why not lock in if you're going to be there for a little while? Now, if you're speculating, I would not buy a house now. If you're going to move in a year, I would not do that. I would rent. That doesn't seem like a good move at all right now. But if your time horizon is, I would say, I don't know, 2-3 years plus, then I think buying is the right move. So that's my suggestion for buyers, is I think you're a lot better off in the long run going ahead and owning. Now here's one thing you can do that we really like, is these 2-1 buy downs. So we call this our rate relief rebate program, which is basically, we're doing this for a lot of buyers right now, where if you're buying a home, we can negotiate, because there's not a lot of buyers out there. So sellers are a little more eager to negotiate with you. So what we can do is get those sellers to make a 2% contribution toward your loan. And what that's going to do, you can see the little graphic there, the seller stacking money up onto your first year and second year mortgage payment. And so what we're going to do is get the seller to help contribute their cash from the sale of the home to make your interest rate lower the first 2 years you own the property. Now, year 3, it's going to set to what the market rate currently is, but this gives you a nice little runway for your first 2 years of home ownership, where your interest rate, let's say the interest rates are 7 like they are right now. What this program does is it means year 1, your interest rate is 5%, year 2, your interest rate is 6%, and then year 3, it goes to 7%. And of course, our hope, we're crossing our fingers, is that at some point during the next 2 years, interest rates drop and you can refinance. And so you never had to stomach those higher mortgage payments. So this is not a bad opportunity for you to get into a little more expensive home. Now you have to be able to afford it. You have to be able to qualify for that mortgage rate at year 3, but it's a great opportunity for you to step into a little higher price home and keep that mortgage payment low. So this is a great opportunity for buyers. We also have our Afford More Advantage program. This is a $7,000 home buyer grant. This is free money. And if depending on where you currently live, if you're moving from certain parts of town in both Phoenix and San Diego, you can get this $7,000 home buyer credit. So if you're interested in learning more about that, reach out to us. You don't have to be a first-time home buyer, but it does matter where you currently live. So if you want to know about that, you can reach out to us. Happy to help you out with that. All right, seller advice. So what I suggest for sellers is, right now, in general, if you don't have to sell your home, if you don't have a good reason to, you might want to hang on to it. Now, this is about time horizons as well. So we've got lots of people recently who we've been talking to who are considering keeping their home to rent it out because they can't get the price they want, right? So they're saying, okay, look, my house is worth whatever, $600,000 today. I was hoping I could get $650 for it. And so I'm just gonna hang on and rent it until it's worth $650. That could be a while. I mean, you could be talking about becoming a landlord for 3, 4, 5 years. It could be quite a while, and you could very well be losing money in that time horizon. So people who have a reason to sell, our suggestion is go ahead and sell. If you're moving, if you've got tenants moving out, if the house isn't, we've got a lot of landlords selling right now because the home just isn't appreciating. And why keep a bunch of money tied up in a rental property that's losing you money, especially if you own it cash, free and clear? Why not get the cash out and go put it in an investment that's going to return a higher return right now? So if you're considering selling versus renting the property out, if your time horizon is kind of 0 to 3 years, our suggestion right now is sell. I think you're going to be better off. The math is going to end up way better off selling. If, like me, I have a rental property that I've got a 3.5% mortgage on, that's cash flowing, it's making me money. Yes, the home is currently losing a little bit of value, but I don't care. I'm going to keep that house forever. Then why would I sell that? Why would I get rid of that 3.5% interest rate? I'd be better off just keeping it, and my time horizon is long. Similar to if you own stocks and bonds in a retirement account, who cares if they go down today? You're going to keep them for 30 years. It's irrelevant, right? But if you have something that's spurring you on, so death in the family, you need the money for something, you're moving, then, but you're considering 0 to 3 years, our strong suggestion for those kind of people is to sell. Or if you, like me, selling my house one place, buying one in another, and you need the money to buy your new house, go ahead and sell. You know, there's really no point in not doing that. But if you don't have to, if you're going to hang on for the long haul, you're better off waiting. Now is not the best time to sell. I think now is better than 6 months from now, probably better than a year from now, but it's not better than 5 years from now or 10 years from now, right? So what we're doing for our sellers to help them get a little bit of an advantage in the marketplace versus all the other sellers is what we call our Sell Like a Builder program. Now, all this is offering a 2-1 buy down. We're just making it known to all the buyers who would be interested in buying our listings. Hey, look, if you buy our house, we'll be happy to provide you a 5% interest rate instead of 7%. Builders are doing this right now. If you're looking at new builds, you'll notice that they're offering lower interest rates as incentives. So we're offering these on our listings as well to help our listings be set apart. This is an optional program that some of our sellers are choosing to use right now to help their homes stand out against other competition. We market this on Zillow and on Trulia and all the websites and that kind of thing. And we also put little signs on the for sale signs and placards and that kind of thing. Another thing that's important for sellers to recognize right now is that price reductions are the new normal. If your home is not selling in the first 2-3 weeks that we've got it listed, it's a price issue. And you can see right now, as we compare year over year, this year versus this month, or excuse me, May, this year versus May last year, a 58% increase in the amount of weekly price reductions. So this is just the world we live in now, where if the home is not priced right, if it doesn't sell, and sometimes, we do our best, we price it as best we possibly can, and we realize the first couple of weeks we get a couple showings, but no offers, or we get no showings. Sellers just need to be prepared to drop that price, and it is better to do sooner than later. What you don't want to do is slowly bleed out for a year, and we're seeing lots of people do that, who they're like, you know what, I'll just sit on my price, I'll sit on my price. Meanwhile, the market's getting worse and worse and worse, and your competition is selling because they're dropping their price and you're not. So my strong encouragement to people, once you go to market, is if the house is not selling, the best weapon you have and the thing you're competing against, everyone else is doing this. So if you're not, you're really sticking out, right? Because you're just sitting around not dropping price while everyone else is. So it's really critical that you be aggressive on those price drops instead of waiting around. You want to lead the market instead of trailing the market. And catching the knife on the way down, as they say. So really important to recognize how normal this is now. So for sellers, if you're interested in selling a property or considering, of course, let us know. We'd be happy to chat with you, figure out what your home is worth, help you strategize on when might be a good time to list that property. Or if you're considering selling, you're like, look, I'm not ready to put a sign in the yard, but I'm interested in, if someone might be, if maybe John, you've got a buyer with your team who would be interested in buying my home kind of quietly off market, let us know. We can put your house on what we call our secret seller list, and these are all the people who are interested in selling their property. They're just not quite ready to go to market. We might already have a buyer for your property. So let us know if you're even considering selling. Reach out to us. We'd be happy to help you out there. And that's it. So that's the forecast for this summer. Let me pop in here, see if we got any questions from anybody. Thank you, Deb. Yes, I will send out a recording of this, Deb, afterwards. This will go out to everybody. Good to see you, Deb. Thanks for joining us. And I think that's it. Any other questions before we shut down the Zoom and now you guys can go make great informed decisions? All right, cool. Thanks, you guys. So you can look forward to this. If you were on here, then you should get this recording here in the next couple of days. We'll get this sent out. It was a pleasure getting to be with all of you guys today. Thanks for jumping on the call.
Thanks, John.
Thanks, Shannon. You bet. Appreciate it. Thanks, you guys. Appreciate you joining, and we'll get this recording out to you soon. Let us know if we can help get you either a list of properties for sale. If you're looking to buy, we can show you kind of what's out there, maybe find you a good deal on a property, or if you're interested in selling, let us know. We can prepare a market evaluation, let you know what your home would sell for in this market. Thanks so much.
Good recording, John. Thanks.
Thank you, John.
You guys. Thanks. Bye-bye.